Hello and welcome. I'm Jonathan Beale, and this is the ASB Investment Podcast, a show that keeps you up to date on the market and helps you make smart choices with your investments. The Reserve Bank is holding the official cash rate steady, but interest rates keep falling. What's the deal? Chris Tennent-Brown is back to give us an update on this, the uncertainty in the US, and what we've seen from the markets in light of the latest COVID vaccine developments. These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB that'll be happy to chat if you need. Well, welcome, Chris. I think this is officially our last podcast before Christmas and New Year. We haven't got any Christmas music, but seems like the year's flown by. I can't believe it's nearly Christmas. Unbelievable.
Yeah, we put our decorations up in the week that's just gone. You know, a month out from the big day, and so we've got a little blow up Santa and lights on the front of the house, and kids stop and look out in their pajamas. Their parents have dropped them off to come and have a look at our crazy house. And
oh my God!
Yeah, it's like a mini Franklin Road, but in Onehunga.
So there's one house in Onehunga that's decorated.
Oh, and the neighbours are into it as well now. In fact, they started it. They egged us on to get into it about 10 years ago, and now there's 3 or 4 houses in our street that are into it.
Oh, wow. And we're in level 1, and life's like almost normal, isn't it? Have you been doing any normal things or...?
Yeah, it does feel like life's back to normal. The only time it doesn't feel normal, I think, for me is when I walk down Queen Street. That still feels very quiet. But
it's a ghost town, eh?
Yeah, but being out and about, it feels very busy. And you know, we had our trip away last week, meeting with clients, and that just felt like back to normal. Meeting people, chatting about investments and the latest thoughts and worries and opportunities. And
how good is the Hawke's Bay? It's all going off in the Hawke's Bay at the moment. It's the place to buy a house. The house prices are going nuts in the Hawke's Bay. Yeah,
they really are. I always like doing a bit of homework before I go to any of the areas. And Hawke's Bay and Gisborne, actually, their house prices have gone up more than anywhere else since February, up really, really strongly, well over 10%, and no sort of signs of slowing down with these low interest rates either. It's so that was a really buoyant feel to the place down there, I thought.
Yeah, it was. We actually had a client seminar in Hastings, didn't we? And we really great getting out and talking to customers again. And then we just a plug for New Zealand businesses. We went to probably the best pasta restaurant I've ever been to, Saggio's, I think it was called.
Yeah, that was great.
In Hastings, and they've redeveloped some of the area there, and like, what a restaurant. The front of house lady, who's the owner, top notch. So if you're ever in Hastings, pop in and can recommend the burnt butter ricotta ravioli. It was fantastic.
Yeah, that was pretty good fun, and it just reminds me of how cooped up we've been and how stimulating it is to get out and about. We had it was my partner's birthday, and we went down to Wellington for the weekend, and it was harder than we expected to get a hotel, which is a good thing.
Yeah.
You want them to be busy after what the hospitality sector's going through over the course of 2020. So that was pretty good. But restaurants were busy as well, and we just absolutely loved it. And actually Wellington can have stunning days, but this wasn't one of them. But we were pretty happy nonetheless, just because we were out of town and seeing different things, and it was great.
And you didn't come back by normal transport, I understand. You came back a different way from Wellington. Yeah,
we caught the train back.
Whoa.
And it was just fantastic. And part of this is because I'm Scottish and I couldn't bear to pay the $350 for an airline ticket. But I said to Sinai, hey, what do you think about the train? I've done it before, but only ever at night time. Maybe a day trip would be quite good. And she was keen, and it was fascinating. You had a little headset on so you could listen to news as you went through all the towns, and I'd thoroughly recommend it as a way to spend a day. And you can get up and about, and there's a dining cart, and there's an outdoor viewing area and all this sort of stuff. So it just was a neat way to spend good part of 10 or 11 hours, I guess, in the end, but we really enjoyed it.
I haven't been on a train in New Zealand properly since I think it was 2003, and I'd flown back from Sydney after England had won the Rugby World Cup. Well, hey, and we had to fly into Hamilton because there was no flights into Auckland, and we were going to get a train from Hamilton to Auckland. And so we got a taxi from the airport to Hamilton train station, and we thought something might have been up, because when I said to the taxi driver, Hamilton train station, he said to me, "Are the trains running today?" And I went, "Well, I hope so, because we've booked on one." And this train turns up, chugs in, parks up, and then we all got on. And then the driver said, "Oh, we're going to sit here for a while because we're going to have to help this other train back to Auckland." And it basically pushed an engine all the way back to Auckland from Hamilton. It took us 4.5 hours from Hamilton to Britomart pushing this thing, which was longer than it had taken us to fly from Sydney. It's the last time I've ever took a bloody train to New Zealand.
Yeah, luckily this was a little bit more efficient, but nowhere near as
and no
swift
buffet
as
cart.
flying. Yeah, well, see, we had the buffet cart. It was really good, and it was just good fun. But I think one of the things that I see when I look at all the data at these days, and this week's retail sales figures were just stunning. There is so much pent-up demand in the economy, and we're getting out there and enjoying it, and I think it'll just continue through over the summer, as long as from a health perspective we can stay on the right side of the ledger. And retail sales bounced back nearly 30% in the third quarter, which is just massive.
Let's talk. There's a few things I wanted to cover off with you today, and one of them I wanted to start with housing, and then we'll try to get into the share markets, and we'll talk about US elections, and then maybe wrap up. But if we talk about housing, and it's just not, a lot of things are normal, like level one, but one thing about housing, it just doesn't seem normal at the moment. It just seems to be going, this is a technical word, just seems to be going nuts. Like, what is driving this demand and the house price increase we're seeing in a lot of regions? And can you help us understand what's going on?
Yeah, I think it's two things. The first ingredient is confidence. People here are feeling like we're past the worst of it on the whole, and clearly there's people who are still whose jobs are really under pressure or have gone because of COVID. But for a lot of people, they're thinking life's getting back to normal, and my job's safe and secure. That's an important ingredient for any housing market. People don't go out and buy a house if they think they're about to lose their job. But the key ingredient is just these low interest rates. They're already incredibly low, and there's people like me out there saying they're probably going to get even lower. There's the Reserve Bank governor saying that he thinks that mortgage rates will get even lower, and so when you've got 2.5% mortgages at the moment, it's just a real kicker. And so we've already seen this big shift in house prices, a big step up, I think, since May, June. When we were in the real doldrums, we couldn't even get out of the house to go and look at a house. Now things are really going off, and they'll probably continue. And the Reserve Bank is doing some things about that. And actually, Grant Robinson, the finance minister, today announced that he really wants the RBNZ to consider what they can do. The RBNZ themselves said earlier in the month that they're going to put or meet with the banks to talk about lending restrictions, the LVR restrictions as we called them, coming back in place early next year. But by then we've had another 4 months of buoyant housing market, and we're seeing the banks, including ASB, are really lending now like those restrictions are in place already. But I don't think it's going to slow down the housing market too much. It's going to be a very, very busy period for sales.
And is that the minister trying to sort of even out the growth across the economy rather than have a housing boom, actually try and have the economy growing as a whole? Is that the signal he's trying to give?
Yeah, the RBNZ really wants to focus on the productive side of the economy, to use economics talk. I don't think anyone would regard it as a success if all that happened from the Reserve Bank's action and the government's action was we just borrowed more and bought houses. I think would much rather see this as a time where an investment takes place to take advantage of these low interest rates, not just buying another investment property. So I don't know where it'll lead to in terms of exact policy changes, and the finance minister's quite rightly not being too prescriptive about all of this, but I think this housing issue is going to be the big challenge for the RBNZ over 2021. It's just not going in the direction that a government that wanted to even out society a little bit would be happy about. And of course, in the last term, the government had the chance, but didn't run with it, to look at what they could do via taxation of capital gains. I think a lot of the stuff in that tax review was a good idea, but it probably wasn't the sort of thing that was ever going to win you an election. And so that's off the table. And so we really are back to, okay, well, what can happen through finance, through lending restrictions, through bank regulation and so forth. So it'll be a big subject over the next 6 months, I think.
And you mentioned you thought mortgage rates would go down as well. How about term deposit rates? Do you see those staying the same or any movement?
Yeah, well, one of the things, because the economy is going so well, we've gone off the idea that the Reserve Bank will cut the cash rate into negative territory. In fact, we never liked the idea of a negative official cash rate, but we just listened to what the Reserve Bank was saying and thought, yeah, this could be the way that the Reserve Bank wants to take it. We don't think that now. We think the economy is going so well, and some of these other issues like the buoyant housing market will probably make the Reserve Bank think very carefully about where to go from here. But they do want more lending in the economy, and so they've set up this funding facility that will be available to banks in December, where we can access long-term funding at the official cash rate. So it's even cheaper funding for us to access to turn into loans to keep the economy going, and hopefully a lot of business loans to keep the economy going, quite frankly. But what that will mean is that there's less demand for term deposits, there's less demand for other sorts of wholesale funding, because this will be the cheapest funding that a bank could access. So we've just seen term deposits getting chipped lower. But and I think that'll continue. I keep just looking across the Tasman and seeing the 0.5% or less term deposit rates that they've got in Australia. They've got exactly the same sort of funding facilities. They've had it set up since way earlier on in the year, and their mortgage rates are under 2%, which is where the Reserve Bank governor mentioned in one of the comments he'd made that he thought that our rates were going to. So that's the mix I still see, even if the Reserve Bank stays on hold at 0.25% for the official cash rate setting.
It is tough for customers, though. Just before I came here, I was talking to a staff member who's retiring out of ASB, and before I could even say something, they're saying, I can't leave my money in term deposit because I'm not going to have enough income. You know, it's that obvious now to people that I can't have the income I need or I'm used to survive just having money in term deposit, and started to think about I need to do something different with my money, which might be property, might be KiwiSaver, might be an investment, might be whatever, but it's certainly moving people to go, I need to think about doing something different, isn't it? Yep,
and I think both with people retiring, they think, well, I'm not going to get the income from very conservative investments like I'd hoped. 10 years ago, a 5% term deposit would have generated a lot of income for people. So they're looking at other things that they can do, and it could be from an investment perspective, like maybe I do need to buy a rental property and be way more active in my investments to try and create some value. Maybe I need to look at more aggressive things like a portfolio of investments. All of those things are happening. And the other thing which happens is people think, well, maybe I just can't afford to retire as early as I wanted to. And I've had conversations with colleagues at the bank as well that were thinking, I'd really like to retire when I hit the age at 65, but maybe I'll keep working for another 5 years or so I don't have to tap into my money or can accumulate a bit more. So it's really having an effect on people. So it's a tough one. I think this type of monetary policy is very uneven, and this thing that we're seeing with housing that Grant Robinson was talking about today is one of the other things which is uneven about it. If you managed to get in and buy a house 6 months ago, and now you're able to finance it at these low rates, you're in such a better position than even someone that wasn't quite there and was looking to do it next year. It's really distorting things in some parts of the of people's lives out there.
And share markets continue to do well. Like the New Zealand share market's maybe 2% off its high, and US share markets steaming ahead, but it just seems you can sort of understand the New Zealand share market doing well. We're back to level one economies, people are out spending, but why is like global share market still doing well with all this sort of uncertainty around COVID and stuff?
Yeah, the local share market, I think, does make a lot of sense. And there's still a number of stocks in there paying out really decent dividend streams. And that's one avenue that people are going down when term deposits no longer cut it. But offshore, there still seems so much uncertainty. And even for us, we were talking before about how the economy seems to be really spooling up. Well, in the Northern Hemisphere, it's spooling down as they go back into various levels of lockdown. And even in America, where they've been really reluctant to go into lockdown, when the case numbers start to get this high, people will slow down the amount that they want to socialise and risk getting sick, I'm sure, over the next few months. So it's going to be a tough winter in the Northern Hemisphere, I think, in many countries. Yet the share markets are going well. And I think really what people are focusing on is the light at the end of the tunnel. The vaccine developments are really impressive over the last month or two, and likewise with the US election result. Now that it starts to look pretty clear that Biden's won, Trump's going to go. I think markets are really looking forward to a slightly more stable period. But the real kicker is that we didn't see this total changeover to Democrats in all levels of US politics. So in some ways, businesses like that because it'll be very difficult to make rapid and broad brush tax changes, for example, or regulation changes if the Republicans still control the Senate in the states. So it was a bit of a Goldilocks mix from a political perspective, even though it's just another month of horrible headlines from US politics. The light at the end of the tunnel, I think, is that you've got a number of investors that are thinking it looks likely Biden's going to lead. That'll probably be more predictable global politics, more predictable outlook for policy. But we're not going to see some of the big changes that people feared if the Republicans still control the Senate.
I think as you said, there's a light ahead of the tunnel, but it's not a train coming towards us. So it sounds like it's a bit of a better outcome. And I think we've sat in this booth all year talking about, Trump tweets something, share market goes down. He tweets something else, it goes up. And at least with Biden, you imagine he's probably not going to use Twitter, I would have thought. But we're not going to have that sort of ridiculous uncertainty that has been the whole Trump administration. And we might get back to sort of whatever normal is, get back to more consistency, I suppose. Yeah.
I think we'd have a bit more diplomacy and a little bit less tweeting. But hey, we'll just have to wait and see. And there's still a few crazy times ahead between now and January, I suspect. But I think it is a better outcome as far as markets are concerned, and that's why they're responding quite positively. The challenge is going to be just how tough the downturn is, and this is where Europe and America have got some similarities and some differences. When you've got things like a bad transition of power in the States, that just gets in the way of the government doing what it needs to do, which is support the economy. And likewise in the UK with Brexit, it's an added pressure on the politicians to try and work through that when they really need to focus on providing support for the economy and getting money into people's pockets that need it, supporting important parts of the economy that can't function very well when they're in lockdown, so that when you do finally have a vaccine, you've got an economy that can pick up pace quite quickly. And this is where New Zealand's been great to show how, when you do have the disease under control one way or another, you can have 98% of your economy functioning pretty well, and that's what's happening here. When you don't, you have these major contractions, and I think when we look at New Zealand, we'll still be 4 or 5% smaller at the end of this year than we were at the end of last year. But we should recover a lot of that through 2021. Whereas a lot of these economies like France and Spain, the UK, they'll be 10% smaller. And it could be even worse if these lockdowns have to carry on all through winter.
You showed me over the years, you've shown me lots of graphs, Chris, but you showed me probably the best one last week about the Google activity one that showed...
Yeah, that's fascinating, isn't it?
Do you want to talk a little bit about that? It shows how New Zealand reacted and how the rest of the world and where we are now. That's awesome.
Yeah, well, I'm always terrified that my phone's listening to me because I just can't work out how when I'm trolling around looking at my favourite cycling website, it knows exactly what to show me and in terms of ads. And it seems that not only might it be listening to me, it also knows where I'm going. And so, yeah, this Google mobility data is fantastic. It's one of the neat things that's come out of the lockdown for us as an economics team is moving away from looking at traditional economic data, which is so late and backward looking, to what's the latest week-by-week data that can tell us how people are responding to these policies. And yeah, the Google mobility data is fascinating. And if anyone that's listening wants to have a look at it, just download it's called the COVID chart pack. It's on our website, and you can download and we put these charts in, and you can just see we had this tough lockdown. We've actually got a lockdown measure in there as well to show whose lockdown was the most severe, and we win that, which I don't think is a prize anyone particularly enjoyed, especially the second time. But as soon as we've come back, we can see it in the mobility data. Once we've come out of these lockdowns, we're more mobile than most other places in the world, which is what you want in terms of supporting your economy, with people getting out there and getting on with it and spending or doing whatever they do for their jobs. So it's a good story.
When we were in lockdown, level 4, we were like not mobile.
Yeah, we were the least mobile
of anyone around the world, most people around the world. And then when we come out of lockdown,
we bounce back to being, and so it's just a real success story. And you know, the places like Sweden where they didn't really have a lockdown, they sort of trucked along below 100% because people were doing their own forms of social distancing. And now our mobility's, a lot better than those places, and they're having these big load ups of cases now. So it's a really good reminder that nothing's perfect. But gee, if you value mobility and getting out and being able to do your thing, we're on the right track if we look at that particular data series.
Now it's our last podcast for the year, and Christmas is a month away, jing jing. And but we should probably maybe think about 2021. We did it last year. I don't think, you're normally right, Chris, but you didn't predict all the stuff we've been through in the last 12 months. So
yeah, I'm
not going to hold you to what's going to happen in 2021. But what are some of the things that you're sort of focused on or thinking about for next year?
Yeah, well, I guess just wrapping up on this year, I think even in February when we did a podcast, I was thinking, this COVID-19 thing, well, when we had SARS, it was pretty tough for 6 months, and maybe it'll be like that, hard on travel. And here we are, it's a global pandemic, which is a whole bigger deal. But I think everyone's focus for 2021 will be the same thing is that light at the end of the tunnel real, and when can we expect to get back to normal? And I'm pretty conservative on this. I still think, and I'm not alone in this sort of thinking, that even if we've got a vaccine that comes out, there's still a long time until you'd go, yep, we're safe to do whatever we want. What that will do, though, is mean that we can do a lot more and get less worried when there are cases in the community, because we know we'll have a much greater resilience to it. Really important for things like the retirement sector and so forth, and other vulnerable people in the community. So I think that will just help us carry on at this alert level 1, hopefully, and being very mobile in the economy, being back to normal. I think the tourism bit's the hard bit. I think we need to, first of all, from a travel perspective, I think that's probably last cab off the rank. But the important bit for next year that I think will be a real challenge is the element of labour market support that tourists provide. There's a lot of jobs in New Zealand that depend on people coming here. Export education's a good example. So international students, coming here to do flight schools, coming here to go to university, and people coming here to do seasonal work like fruit picking, all that sort of stuff. They make up a big chunk of the of the labour force. So there's aspects of that that'll be important for next year. I'm nervously looking at what things like the kiwi fruit industry comes up with. So that's a big sector that will hit some problems next May with labour shortages. Grape harvest, similar sort of thing. So those will be issues for us to really deal with, and it's all sorts of things. It's the health aspect, it's the government policy, it's how we can manage the border, and how we can contain any little outbreaks that come along via people coming in through the border. So that'll be the first thing that I watch over the beginning of the year. And then over the second half of the year, I'm really hoping that we're starting to go, right, how are these vaccines going to work and on the economy? And like I say, I think the last cab off the rank will be, right, when can we start to see some travel bubbles open up and tourism come back? Because that's the missing, those international students and the tourists are the missing piece of the puzzle at the moment. And the reason why things like Queen Street's very, very quiet these days, and will continue to be so. It's the reason why we're not having cruise ships and concerts and sports events and all those sorts of stuff that really do generate a lot of activity and also a lot of satisfaction in the economy. We were joking before, I think we'll probably hear quite a few Kiwi bands over the next year before the international acts can start coming back. I see Guns N' Roses are on the cards for next year, though.
Really?
An optimistic goal for late next year.
My daughter's very upset because she was supposed to see Harry Styles last night, and I don't think she'll ever forgive him for not coming. He could have come.
Yeah. Yeah, and hey, that's my, from an economics perspective for 2021. But what about you? You've got some changes ahead?
Yeah. This is like our last podcast for the year, but this is my last podcast at ASB. I'm moving on. After 15 wonderful years at ASB, I've decided to take up another challenge outside of ASB. So, going to miss a number of things. Definitely going to miss the booth. Going to miss the cheese that comes with the booth. Always put on a good brie when we come in here. Maybe a little bit of the red wine, but probably the most thing I'm going to miss is the people at ASB. It's just I met some wonderful people and worked with some great people, learnt lots, but thoroughly enjoyed every single moment of it. So it's going to be it's a big day on the 16th of December when I leave, but ASB will move on and do great things, but hopefully I've left it in a better place than when I first came here. So time to move on, but going to miss the booth.
Yeah, well, I'll look forward to being back in the booth next year, and I'm sure we'll carry on having the conversation over a red wine. It's just that we won't be recording it and playing it to anyone else.
Well, as always, thank you, Chris. It's been great chatting to you, lovely insights, and I won't hold it against you. You didn't predict the global pandemic, but it sounds like next year is hopefully going to be a lot better than 2020. So all the best to you.
Thanks a lot.
Thanks for joining us today on the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on future shows, please fire your suggestions through to podcasts@asb.co.nz.